And now to Boral. Building materials business Boral posted a whopping $1.1 billion net loss after a $1.2 billion write-down on its North American assets.
And some interesting players building stakes in Boral too. Seven Group, Perpetual and also Tanara. They all see value to come.
Yeah, so I sat down with the new CEO, Zlatko Todorcevski.
My priorities are really to work through what the right portfolio for the company is in the future. And I'm looking at each of the locations. It's just not North America, which most people seem to want to fixate on at the moment, Tiki, but Australia and USG Boral. Thinking through the right way to organise the company and then to think through the right kind of capital structure for us going forward. That's all ahead of us, and we're working through that over the next 2 months.
Let's go to this fixation with the US, the $1.2 billion in write-downs. You talked today about the synergies that are still to come as really almost as though they weren't going to be there, and it was more about unlocking existing value than trying to find the rest of the promised synergies.
My focus going forward, Tiki, is on running the US businesses relative to the opportunities that sit in the market and their own inherent opportunities. So I'm not looking to generate synergies, I'm not looking to create anything that's not there. It's really about maximising the opportunity that sits within each business, each segment, each operation. And I really don't differentiate between synergies or operating leverage or operating performance. That's how I'm thinking about it at the moment.
So you had a look at the review of the North American operations and headwaters. You called it sobering. In what way?
It's never good, particularly as an incoming CEO, to have to take an impairment. And I know people assume that me coming in, it was going to happen, but
well, it's the sort of thing new CEOs do. They sort of wipe the
Well, they do, but I think in this instance, it's not something I was looking forward to. I think it's probably the best way to describe it. But I've got to say the board and particularly the management team are really transparent, and everybody was very open about the right thing to do. And that's very important for me at the moment, Tiki. So having gone through that exercise, understood what the potential for these businesses looks like, what the market context looks like, the $1.2 billion impairment we took in the US was absolutely the right thing to do, and it sets us up for strong performance in the future.
Right, but it is a big destruction, if you like, of shareholder value, certainly now. It's not surprising that there's pressure to sell some of these assets in America. You've certainly got pressure, I think, from some of your new shareholders to do so. Wouldn't that actually re-rate the company if there was more focus as an Australian business, essentially?
I don't believe so. So my focus at the moment is to understand what the potential of all of our businesses is in the market context that they operate in. And yes, we took an impairment in the US. I think that more so reflects what was paid for Headwaters relative to the market potential that we now see. And I still see a lot of upside in each of those US businesses relative to where they've been performing in the last couple of years. So I am really fixated on making sure that we can deliver that potential and understand it, whether it's ultimately in our portfolio or not.
Looking at your Australian business, which I think had a $123 million write-down. Now, EBIT fell 50%. I think that was slightly softer than the market expected. Once again, are you looking at big changes in the Australian business? Because that's where these new shareholders see real potential.
And I would absolutely support that. So I see massive potential in the Australian business. We have very privileged assets, got a great position particularly on the East Coast and especially here in New South Wales. And I think they've been run quite well, but we have not shown the operating leverage over the last 5 years that I believe those businesses could have delivered. So we're thinking through how we bring the operational excellence lens to a greater degree, how we bring consistency and common standards, and how we drive some duplication out of the business that exists today.
You talked about cost cutting, freeing up inventories to create more liquidity. How do you balance that with also making sure you're well prepared to leverage in any recovery in the economy, both here and in the US?
Well, it's a great question. So I am not fixated on cost cutting today. I think we've done that for the last 12, 24 months, and I don't think it helps the business. I'm looking for a fundamental change in how we run Boral in the future, what the right operating model is, and how we then set that up to operate the business for the next 3 to 5 years. But the point you raised, Tiki, is exactly what I am looking to build in Boral. It's how do we get the right kind of leverage so that we're nimble when the market turns against us, and we're able to respond really quickly when it takes off again.
Have you got the right team that you need?
I'm really happy with the transparency and support that I've got from the team today.
On the capital front, you're also doing a lot of thinking. You've obviously decided that certainly at the moment there's no need to raise capital, which was something that the market was also fixating on. There are no dividends paid, though. Are we going to find that in October perhaps there might be a need for a capital raising?
I don't want to prejudge what's going to happen in October, and I think I said it on the investor call, but with the uncertainty we face in all the markets we're in at the moment, Tiki, we're managing this business on a quarter-by-quarter basis. So Q1, we've got visibility around what happens in certain segments. As we get to the end of Q1, we'll think about what Q2 starts to look like. I'm not going to prejudge when dividends may or may not be coming back again, but that's the lens I think we've got to manage just to maintain flexibility and respond to market opportunities as they arise.
Your board is obviously going to be very much in focus at the AGM, given this major write-down. What can investors expect from you in October?
It's really the three elements of the review that I'm undertaking at the moment. So this is not a strategic review. We're not thinking about Boral 10, 20, 30 years down the track. It's looking at the existing portfolio we have, the market segments in which we operate, and determining are they a fit for where we want to go, and can they deliver the performance we're expecting. At the same time, how do we organise ourselves to be efficient, nimble, and then the right balance sheet with the right capital structure. All of that will be announced in October, and in fact I'm hoping a lot of it will be action before then.
Given that you've got Seven Group, which has built sort of up a 16% holding, you've got Scammer in here with Perpetual, and you've got John Wiley, Tanara. Obviously, they are expecting great things. Does that give you some confidence as well?
Everybody that I have spoken to who's a major shareholder has expressed a view that there is much more value in Boral than we're currently seeing in the share price, and I am completely aligned with that. That's part of the reason I took the opportunity. And I think this is a great business with great assets and passionate people, and we can do a lot better than we've done.